Cash-based accounting system for an e-commerce business means that when you buy the inventory, you write it off. In an accrual-based accounting system, you don't write off the expense of the inventory until you make the sale. You have to switch to an accrual-based accounting system once you get to around, I think, $20 or $30 million a year. Until then, it makes the most sense to be a cash-based accounting system because I want to write off the inventory purchases when I make them at the end of the year. I don't want to hold on to all that money and pay taxes on retained earnings if I don't have to. This topic is a little in the weeds and it's best saved for your accountant.
Here's the one thing that he missed. You can be on accrual basis on your financial statements, and when you file taxes, you can be cash based. So you can actually be both and get the best of both worlds. I mean, you don't need to wait to 20, 30 million to start tracking inventory. If you're a $1 million business, you want to be knowing your true profitability. If you just put all of the inventory you buy to an expense, you don't know your true balance on hand of that inventory and the true profitability when you sell that inventory, receive the revenue, record that cost of goods. You have no insight into that profitability. So you're doing yourself a disservice if you're on a cash basis in your financial statements throughout the year. Now, yes, I want to write off all my inventory ASAP on my tax return. You can still do that. You can do both. You can have the accrual based financials, and with the touch of a button in QuickBooks, you can have cash basis to send to your accountant. So you can actually have the best of both worlds. And I highly recommend you look at your financials on accrual basis, especially if you're at that $1 million mark. You absolutely need to be, or you're looking at your profitability completely wrong.